Our next panel, we're jumping right into it just because we want to stay as close to schedule as possible, is our carrier executive panel all around sales and distribution. And joining us, we have Jerry Blair, Vice President and Chief Distribution Officer at Sammons Financial Group Life Division, otherwise known as North American. Jerry, great to see you. I haven't seen you since NAILBA last year.
It's been a while.
Awesome. Thank you for joining us. Also, we have Linda Levyne, Senior Vice President, Head of Sales and Distribution for John Hancock Insurance. She's going to be clicking in here any second. And then finally, we have Kevin Brayton, Executive Vice President for Distribution and Sales, Individual Life Insurance for Prudential. So they will be joining us here. John, go ahead and get them connected. And Jerry, while we wait for Linda and Kevin to get into the queue, there's Linda. Hi, Linda.
Hello. How are you?
I'm well. How are you? Thanks for joining us.
Absolutely.
And we'll give Kevin a second to join us as well. This is sort of like that. Hey, Kevin.
Hello.
All right. I want to make a quick joke because I know all three of you pretty well, but does this remind you of that sort of Brady Bunch where you're looking to the side and looking down?
It does. I really want to. Marsha, Linda.
Exactly. Marsha.
I want to thank, first off, I want to thank each of the carriers you represent. You're big supporters of NAILBA. Clearly, you have a big investment in independent distribution. You work with pretty much every BGA out there, and if they're not working with you, they should, and the same goes for the advisors. So thank you for making the time for NAILBA, as you always do and always have. First, I want to jump right into our questions here, and Linda, I'm going to let you kick it off. What will be the most significant change caused by this crisis, and what is the impact on brokerage for the future?
First of all, thanks for having us. I'm really excited about this opportunity, and kudos to you for making it happen while people are at home and not able to kind of get information. So I think this is fantastic. In terms of what we see happening specifically in relation to the crisis is a couple things. One is that the change of consumer sentiment about life insurance. We're seeing people, reaching out, asking for coverage, really just being more mindful of their own mortality, which is, a tragedy, obviously, that this happened to us and happened to the country and the world. But if it does help people get the coverage they need, obviously that's a positive. The other thing that we're seeing is people being more mindful of their baseline health. We found there's a really big impact to how people went into if they went into COVID exposure, where they came out of it, and specifically how important it is to kind of focus on your health. And so we're excited with that, with our Vitality Initiative and Aspire and things that we could do to help improve. And the other thing is that's coming out of it that's kind of unique is related to, again, to more healthcare, is the aspect of telemedicine and how important that is, and people realizing, do I really need to see my physician? Can I go in and get, can I do it over Zoom for some things, maybe going less frequently? So it's just changing the notion of how you seek medical care. But what I think is really fascinating is it's, of course, changing how producers and consumers are engaging. So the whole realm of digital, everyone's already been talking about it all morning. But that aspect of how it can really change has been pretty fascinating, to see that, a lot of producers were kind of stuck in their ways of doing things. They had a certain process and they weren't adopting some of the tools. And now that they're seeing one necessity made them kind of move down that path, they're seeing the real value and that they don't necessarily have to go out and see clients. They can build relationships over Zoom or other mechanisms, which I think is really important. I'd say, and the last thing about the crisis, what it's doing, obviously, it's a great change to our business. And that if you weren't a digital-oriented carrier, we needed to get there very quickly. So how adaptive can you be to quick changes? Insurance industries typically move very slowly. But kids say, if you took a maternity leave and you left to raise your kids for 5 or 6 or 8 years, you'd come back and nothing would have changed, right? It was all kind of the same. But we're now seeing that, the rapid advancement and everyone kind of getting resilient and figuring out how to make this work. Like for us, for example, moving to being able to use DocuSign for all relationships, or using Human API or Coloretto for medical records, or doing without parameds, things of that nature have been a big impact. And then, of course, last is, really getting nimble about doing business in a non-paper format. So, for example, we just launched our e-app, which allows it both consumer and producer facing, and has can have straight through offers up to $3 million at age 60. So that type of change is what we're going to see the whole industry continue to capitalize on, because it's frankly working in this environment, although still clunky in some ways. We'll get better.
It is. And Linda, I was thinking of John Hancock when this started, because of obviously Aspire and Vitality, just, really getting out at a perfect time to leverage technology. Kevin and Jerry, I'm going to ask you guys, all of you are going to be asked the same question. So Kevin, tell me about what's going on at Pru. What's the significant change that this crisis has caused in your point of view, and the impact on brokerage?
Yeah, Dan, thanks a bunch. Appreciate the opportunity to be here and be part of this great event today. I think we're seeing three things, particularly in our business at Pru. I would echo Linda's comments about the relevancy of the solutions that we bring to marketplace. And specifically, here is the life insurance solutions. We're noticing, a significant amount of interest in obviously mortality-based solutions, life insurance solutions for consumers. I think that's a really good thing for our industry. I think when you have so much challenging news with regard to our industry, whether it be the interest rate environment, whether it be the mortality environment, whether it be the declining rate at which advisors are, coming into the business, and even the acceleration of advisors exiting the business. I think there is one thing that our industry needs to band together on, and that's around the relevancy of our solutions, and the fact that you really can't build a sound financial plan or do the appropriate planning holistically for consumers unless you incorporate a longevity and mortality planning into that. So it's unfortunate. Agree that it takes kind of two major tragedies or major or epic circumstances to happen, which would be a financial crisis and a pandemic crisis, but never before have those two things come together and created a wave of relevancy for the ideas, the concepts, the planning solutions that we can now bring to the table. And I believe that those will be there for the long run, because when you think about how all of this stuff, it has to get paid for, the government support and the stimulus, how it gets paid for, there is no better financial vehicle than life insurance to help manage through that stuff. So that's one. I think two, we are also seeing, a massive adoption, forced adoption, if you will, of e-capabilities and digital tools, which I think we can't go back. We won't go back. I don't think there's any desire on distribution or manufacturing part to go back. So I think the big bang, so to speak, was there was always hesitation to kind of move with distribution to force technology, force virtual engagement, force digital usage, and all that stuff. The big bang came in the form of a pandemic. It was really the only way that you could get business done. And now it's kind of focused on how do we accelerate this? How do we make it even better? And how does this become just the way that we do business with our customers? I think that will lead to a better advisor, a better distributor, a better customer experience for all of us. So those are the areas that we're really seeing huge spikes in. And I believe that those two will have a lasting effect on our business. And then the final area where we are seeing a noticeable difference and putting a lot of time, energy, and effort into is with this pandemic. We know that it has particularly stricken certain ethnicities and demographics far greater than others. That primarily being the African American community. So we are continuing to invest and continuing to see opportunities in different marketplaces. I would say that those would be multicultural marketplaces where we believe that the storyline of the pandemic, and we believe that the storyline of the opportunity to do financial planning in those underserved or underinsured or underprivileged marketplaces is a great place for us to be, and a great place that we've seen some significant tailwinds in the last 100 days.
Kevin, it was just a few months ago. You and I were sitting together, and we were laughing about the word. Obviously, this was pre-COVID. Yeah. We were laughing about how many speeches are being given on disruption, and then a few weeks after that, wow, talk about the Big Bang theory.
That's right.
Disruption has been disrupted. Jerry, it was just a couple of more months ago that you were on the main stage at NAILBA, talking about North Americans' investment into the independent brokerage and distribution space. What have you seen change, and I mean, you've been there now, what, just over 2 years about now?
Yes, absolutely. On the brokerage side. Yeah.
So nothing like being just thrown into the fire.
That's right. A lot has changed. And I think, what I've heard this morning, and I'm sure others have as well, is a theme. Certainly technology, Kevin alluded to the relevancy of the companies in the business. And, Linda, I liked your analogy. You could step away for 5 or 6 years, come back, and not a lot changed. For us personally, we met mid-February as a group. We were discussing, the technology and the planning process, and we thought we had the rest of this year to plan for the right e-delivery solution, and we would do our homework and we would figure out the best possible way. We had other pieces of the electronic process intact. That was our missing link. And 30 days later, we found out that what we thought was a long period of time had shrunk to about 3 weeks. So the speed at which some of the decisions we're having to make is coming at us much faster. As Kevin alluded to, that you had the market fell out at the same time COVID hit, and we were trying to figure out what was going on, which caused a lot of us to have to take a quick look at our product portfolios and figure out how can we be more nimble there as well. So relevancy, I think speed to which we make decisions certainly have an impact. But the other area I would hit on briefly is just the value proposition in terms of what we do to prepare our teams to support our customer base. As things change, I think back to mid-March when I started working from home, and this screen I'm looking at right now has 4 faces. There'd be one face live and the other 3 would be dark. People were afraid to show their faces. Now you dial in, and if you don't see everybody, you're like, what's going on? Or heaven forbid, there might be a go-to meeting. So we think a lot's changed in terms of the value we bring and how we go at it, and we're going to continue to work on that. But
crisis equals opportunity, right? And getting to know each of you over my time as CEO of NAILBA, we thrive on opportunity. We thrive on areas to change, and now we have the opportunity to do so. Kevin, I want to kick it back to you. You guys have to be seeing pockets of growth in sales since March. Fast forward to July. Where are you seeing? And then Linda and Jerry, I'm going to ask you guys the same question.
Yeah. So we're seeing a overall very healthy sales year so far over the course of the last 120 days, in particular during the COVID. We are seeing a particular spike, like probably many, in term insurance sales, shorter duration term insurance sales. But oddly enough, we're also seeing a significant increase in our VUL product portfolio as well. So, and let me go a little deeper on why I think that's the case. I mean, I think there's certainly, a very fluid environment where a lot of us on the carrier side have had to make very difficult and very quick and very abrupt changes to our product portfolio to react to the current market environment and the interest rate environment. So that being said, I think that the thing that I feel best about is the breadth of our distribution and the reach that we have, predominantly through the BGA community and through NAILBA members that help us reach deeply into broker dealers, wirehouses, banks, credit unions, independent producers, property casualty agents, and all of them have very different needs and very different ways in which they approach the marketplace and sell. Believe that having a broad set of products and solutions that are on the street has really helped us weather the storm. But in particular, what we've seen is pretty significant increases in our shorter duration term and our VUL, which is the places where we think that we can compete the best, where we think that we can weather the storm the best, because those two segments of products for a public company operating in this low interest rate environment uses the least amount of capital and has the least amount of interest rate risk associated with it. So you'll see us continue to try and double down in those two segments and try and widen our lead there.
Jerry, what about North American pockets of growth that you're seeing?
Yeah, some similar trends to what Kevin's sharing. We certainly have seen a really nice uptick in our term sales. Our app count overall, we're very pleased with. We did lose some traction in the highly overfunded IUL space. In some of those, we've actually we immediately took our GUL premium limits down and then abruptly took them right back up. So we've seen a nice uptick in our GUL sales within our sweet spot here in recent weeks, which we're very pleased with, and we're starting to see growth come back in those overfunded IUL cases too. So early, like I said, real heavy term. Of late, we're starting to see a little bit of normalcy come back into our product portfolio.
Linda, how about you? What are you seeing at John Hancock?
Continuing with the term trend, we certainly have seen a big intake of additional term, higher submissions in terms of apps and sales. That, as you would expect, again, we're hearing a lot of people saying, can I lock in some insurability and then make some decisions longer term about what I want to do for planning? So that's been positive. Early on, as people were trying to figure out how they can operate this way, we did see some, perm declines in terms of submissions, but we're seeing that turn back around. We were a carrier that was still able to write coverage through age 80, took a pause on above age 80, but we were still looking at those cases and underwriting just couldn't make offers. We now are writing all ages through 90. So of late, we're seeing really some huge cases come to bear, some really big cases. And I think what's happened there is just the strength of our underwriting expertise and being able to kind of work through these cases at this time when maybe some other carriers were taking more of a pause than we did. We felt really comfortable that our risk profile was attractive and it was business we wanted to take. So that's really been good. And then also the flexibility we've been able to show, again, if consumers are still uncomfortable going out and getting a paramed or, they have older evidence, things like that, trying to work without normal age and amount requirements, that's where it's helped us uptick. So what that's led to is on the perm side, we're seeing, some really nice results on the IUL side of the house and our regular UL product as well.
I love hearing about all of the growth areas that each of you shared. And Jerry, I'd like you to kick this one off. Now's the harder question, right? Everyone loves to tell the story about growth, but now that you've had a good 6-7 months in this COVID like era, underwriting has had to change. You had mentioned about the flexibility to adjust to certain products. Now, moving forward over the next 18 months, we are going to come out of this. We are going to see a lot more life apps being processed. Now, where do you want to invest time and resources? And conversely, where are you reallocating time away from because of, like I said, the almost instant data that we've been able to secure?
Yeah, I'd say there's two key areas. One is, I alluded to a little bit earlier, but we're investing in people, so people and process. As a company, we're making sure everybody's equipped to work from home. We immediately moved everybody out. Tomorrow starts the first wave of moving employees back into our core centers in Des Moines and Sioux Falls. But we want to make sure as a company that we're equipped to operate efficiently going forward. So there's a big investment in technology there to make sure that everybody has the equipment they need for a long-term solution, not just the short-term. we're also taking advantage of the opportunity to invest. If my wholesaling team has to operate in this fashion right here, we want to make sure that they're bringing value, that they're actually delivering in a way that's causing people to take action and helping agencies grow their business. So we're investing a fair amount of time and energy in the development of our folks. The end-to-end process would be the other side. Clearly, as I mentioned earlier, we had pieces of it intact. We saw our adoption go from about 50% EAP to close to 75. We like that, but there were other pieces that just needed to be shored up. So I'd say a complete, overhaul end-to-end to make sure we're as efficient as possible and we're able to operate really with alternative data. We don't want to be in a position where state of Pennsylvania or in California, you can't do a paramed, or people just don't want a paramed to come in their house and put the brakes on. So those would be the two primaries.
Linda, areas that you want to invest more in versus areas now you want to areas you want to reallocate from.
Yeah, we had already been in a process of investing in our technology for our employees, so that they were able. We were able to make that shift very quickly, getting everybody working remotely. And what we found is that there are definitely some efficiencies that we found with that method. So we're going to continue to look for ways to be smart about how we travel and what we do. We definitely want to get our wholesalers back out in the field and our account reps as well. But in the meantime, we're, that element of technology and that giving them the sales enablement tools are really key. So that's one part of it. The other thing that we're investing in, and we've been investing in actually over the past 3 years, we've been moving towards this timely touchless underwriting notion. And that is, again, agent amount requirements are, by a block of individual, and not everybody's the same. So if we can be moving towards what we were able to kind of roll out already, some of our modified underwriting requirements, changing what we expect for case. Can we do more things, again, via our EAP is one method, but they complete that, it comes in, it can run the engine, it can be for any face amount for any age, but again, some of them will be streamlined. Even if they fall outside that 3 million and age 60, can we still then just go to getting APSs versus expecting exams? And if we can do that, again, via human API or Claretto or the other resources, that could mean potentially a pseudo instant there as well, or within the day. So that's a lot of where our investment is, continuing to build that out. Also, we are not of a notion of, if you build it, they will come, right? So we built our own EAP, but we built it with an idea that we know it's a multi-carrier world, and you're going to want to have options. You're going to want to have the other carriers available to a producer. So with that, we built with an idea: how do we connect to platforms? How do we connect with the ways that people, the NAILBA members, want to work? So that's kind of our philosophy: is how can we adapt to the way that they're doing things? In terms of what we're not doing as much, obviously, is none of us are really doing in-person
travel
meetings. But are there other ways to support BGAs? Is there another way to help them grow their business and think about? So it's a lot of that custom solution, going out to people saying, can we talk to you about how can we use data analytics to help you, better work with your client base? Can we do specific marketing customized to you? Things like that we're doing in lieu of, obviously, the T&E budget that is not being spent for planes and trains and automobiles.
Kevin, what about Prudential? Are you riding on any planes, trains, or automobiles anytime soon?
No, absolutely not. So, I'd echo Jerry and Linda's comments and just build on 3 areas. One, we're definitely investing much more in technology and our e-capabilities, right? So expanding our e-capabilities, our e-interview, our e-delivery platforms, our e-issue platforms, our e-submit platforms, our records collection platforms, and all of that stuff. We are accelerating that. We are continue to modify and bring new solutions to the marketplace. So that's first and foremost, and that is all getting top priority across the business. So I think we have a really good footing and foundation of all of those tools. And now it's just customizing them for our better partners and, adding features and benefits to those existing platforms as well. I think the second area is really reaching into new markets. So we're doing that through the development of either new partnerships, like our Assurance IQ partnership or acquisition partnerships that we are also looking at in adjacent businesses or adjacent industries that we think could be very interesting. And those are particularly focused on reaching the middle market and serving the middle marketplace. And we believe that the way to do that is through simplified solutions. So continuing to really simplify our product solution set and combine that not only with a simple to understand life insurance solution, but combine it with the front end that makes the acquisition process very simple, so that it's a bundled solution, it's a packaged solution, it's really an experience at the end of the day, and really trying to find the right opportunities to distribute and drive those experiences into the middle market is a place where we're spending a lot of our time, energy, and effort. And then the last piece is really around helping. This goes back to the relevancy and reaching into the marketplace that we already work in very effectively. But we're spending a lot of time helping our BGA partners really understand how they can spend more of their time focused on sales and marketing and reaching underinsured and uninsured individuals, or reaching brokers and stuff like that. So a lot of that has to deal with lead generation. A lot of that has to do with effectiveness of managing sales organization. A lot of that has to do with marketing, and certainly a lot of that has to do with how do we virtually engage going forward, because so much of our business in the past has just been done in a face-to-face manner. We're just simply changing the manner in which we do our business, the how. We're not really changing the what. The what is, we end up paying people, or we end up having such, good sales organizations and good distribution partners, because those people are really good at convincing and compelling and influencing people to take action. That's ultimately what a manufacturer pays distribution to do. We just have to figure out now how to effectively do that in a non-face-to-face environment, because I think we're going to be here for quite a long time. And of course, the things that we are deprioritizing, we're deprioritizing a lot of the travel, a lot of the face-to-face stuff for sure. We're deprioritizing going back into, home office settings, definitely. And then back to the product front, I would just, reinforce that we are deprioritizing things that, require a lot of capital. And require a lot of interest rate sensitivity. So
I want to give each of you a quick opportunity, as we're sensitive to our schedule, to talk about what sort of new products or what story that you feel should be told. While you guys prepare your answer for that, I also want to poll the audience. In your poll section, what anticipation do you have around additional investments in technology beyond the traditional process? Do you plan on making additional investments? Do you not plan on making any additional investments? Maybe your agency is set up, maybe it's not, or are you closely monitoring the environment? But we're going to have those poll results live. So the last question, and again, being sensitive to time, Kevin, I'll stay with you, and then I'll go to Jerry, and then Linda will finish with you. Outside of product repricing and tweaks, which all of you have mentioned in some way, shape, or form, do you have any new products that are are scheduled to be launched this year? And or you could take the other question is, if you look back on 2020, what have we learned from this situation? Like, for example, you've all pretty much indicated virtual sales can be done. So Kevin, I'll leave it to you. Do you want to go on new products, or do you want to go on looking back of what we can expect moving forward?
I'll look forward.
Okay.
Looking back. How about that? So,
I'll get you guys on new products yet. One of these days I will.
So I think, we already have a very robust product portfolio. So for us, much of this is going to be tweaks and repricings and enhancements to existing products. I would say there's two things that I am very excited about that are going to be coming out that will help us drive the right things that we need in the marketplace, and that would be directly related to our benefit access rider or our chronic illness rider, which is BAR. We are adding that to our survivorship VUL product later this month. Which is great news for us. And then we are also adding care coordination to that later in the summer. So I think those are two things that really speak to a need that's in the marketplace, which is the chronic illness and or long-term care riders that are attached to life insurance policies, which is great. I think the brokerage community can do a better job in promoting those types of solutions and bringing those solutions into the marketplace. But I think that we as a carrier are making another step into both the survivorship space with that, as well as the care coordination space, which I think are two very important places.
Exciting. Thank you, Kevin.
Yep.
Jerry?
Yeah, we added the critical chronic terminal to our term last year, so that kind of filled out our suite there. So we're having a fair amount of success there. About 50% of our product portfolio is in IUL. So with the AG 49A vote being passed and behind us now, I would anticipate that the next product you'll see there will be the next version of our IUL suite, our kind of our workhorse product.
And Linda, you want to finish it up?
Sure. In terms of products, we're going to continue to focus on our product fundamentals. We have really good results long term in terms of our general account performance and so on, and how we manage our products. So continuing with the strength of our protection UL product and the investment strategy we have behind that. Also on our IUL products, again, focusing there on that. We have a new Acume IUL coming down the pike. We'll have a new survivorship. So those are some of the things we're doing. But other things are this realm of Vitality and Aspire. Where we are is we're 5 years into this initiative, and in this time, we're continuing to see incredible growth. We're up about 85% year to date. In the last 12 months, we've sold over $200 million of target premium of the plus sales. So it's really moving forward. And with that, what's really exciting about it is that we're seeing about 20% higher close ratio and about twice as likely for that consumer to recommend that producer. So all those things are going well. But what's also been fantastic to see as we're in this point is we are seeing actual health improvement. Like 47% of people are reporting a BMI improvement by being in the program. 40% have improved their longevity, their actual mortality, and it's actuarial proven. So with this, we're going to continue to develop the Vitality Initiative, and we're going to continue to develop Aspire and things like Aspire. As I mentioned, Aspire is like perfect for this time because it's for individuals that are living with diabetes. And what we found out in this environment, one is access to telemedicine is really crucial. That's part of the program. It comes with it. But the other is that your baseline health as a diabetic makes a big difference. If you went into the crisis with an A1C that was in range, your mortality was about 1% for COVID. If you were out of range, the mortality went to 11%. That's what's been proven in the among endocrinologists. So with that, you'll see us continue to make those moves. Not only, Vitality Aspire was the specific solution for diabetes. You'll continue to see us develop out of solutions that are customized. So they really meet and market what that individual needs if that person has a different impairment or a different situation. And then lastly, I would say, we're the only carrier that has a relationship with Google and with Amazon and with Apple and with Starbucks and all those sort of things. You'll continue to see the build out of the program, and you'll continue to see more partners with us in terms of the element of making life insurance, easier to buy, fun to own, and one in which there's more relevancy for the consumer, that they get more out of it than just benefiting their heirs.
So great numbers. And speaking of great numbers, I'd like to share with you that 83% of the advisors and VGAs and others on the call also plan to make additional investments in technology. So together as an industry, we can grow. Linda, John Hancock, Kevin, Prudential, Jerry, North American, I want to thank you for your time. I want to thank you for your support of independent brokerage distribution.